गुड आफ्टरनून एवरीवन। मैं अंजलि नायर किरिन एडवाइजर से सबको वेलकम करती हूँ टू द बियॉन्ड द नंबर्स वैल्यू डिस्कवरी समिट 2025 powered by Value Educated, co-powered by Kirin Advisors. Today marks the final day of our 3-day summit featuring a powerful lineup of focused management meetings to conclude the journey on a high note. Up next is our 8th interaction with Khazanchi Jewellers Limited today. मैनेजमेंट टीम से हमारे साथ है मिस्टर राजेश मेहता, द जॉइंट मैनेजिंग डायरेक्टर। गुड आफ्टरनून सर, वेलकम।
Good afternoon, everyone.
फ्रॉम द वैल्यू एजुकेटर टीम से हमारे साथ है मिस्टर साहिद। विद दैट नाउ आई हैंड ओवर द फ्लोर टू मिस्टर साहिद। ओवर टू यू।
Thank you for the introduction. Before we start, a quick introduction on Khazanchi Jewellers. Khazanchi Jewellers is incorporated in 1996 and is engaged in the business of gold ornaments and gold bitcoins and gold silver bullions. The company operates across both wholesale and retail markets, offering a wide assortment of gold, diamond, and traditional jewelry category include Kundan, Kolkata, Kalera, and temple design. Its product strength comes from a deep design library, over 5 lakh designs, and 20 more than 25 product categories supported by dedicated 1200 square feet showroom in Jaipur. The company is BIS Hallmark and is also an authorized jeweler on Indian International Bullion Exchange, enabling efficient bullion sourcing of gold and imports. With this brief introduction, now I hand over the call to the management.
Thank you, Sahil. Good evening, everyone, and thank you all for joining us today. As he has already defined about the company, it's a Khazanchi Jewellers Limited. It was inception in 1971, synonymous with its craftsmanship, purity, and design excellence. Over the past 5 decades, we have built a strong presence across both the segment, wholesale and retail segment. As you all know, we are selling up BIS Hallmark certification jewelry, authorized dealers of IIBX, and our BSE SME listing in August 2023 underscores our commitment to quality, transparency, and sustainable value creation. A brief about business and strategical update. The first half of FY26 was characterized by steady broadband growth. We strengthened our operation foundation, expanded our customer reach, and continued to different through design-led offering across both business verticals. One of the vertical is B2B, wholesale business. Our wholesale segment delivers healthy performance, supported by consistent order inflow from leading jewelry houses, distributors, and retailers all over India. Institutional demand remained robust, aided by the accelerating shift toward organized players and growing preferential to BIS Hallmark jewelry. A major highlight was the significant expansion of B2B customer base, which has reached about 2,000 active customers in the last 3 years. This strong growth reflects the increased acceptance of our design capabilities, dependable fulfillments, and customer-centric approach. Our designs, strengthen, and efficient distributor network enable us to execute large volume orders with precise and timely delivery, further reinforcing our leadership position in the wholesale gold jewelry segment. Now, another leg of the retail business, our B2C vertical, continues to perform steadily, driven by our flagship showroom in Sokarpet, Chennai. This outlet remains central to our brand visibility, customer engagement, and retail-led demand. I would be happy to inform you that we are planning a grand opening in January 2026, coinciding with the most seasonal business here in South India, that is Pongal festival season. This showroom represents a major strategic milestone as is expected to contribute approximately 500 to 550 crores annually to the top line in upcoming years, along with meaningful improvement in profitability given the high margin profile for B2C operation. Starting FY26, we expect the B2C contribution to rise from current digital level to approximately 20 to 25%, significantly strengthening blended margins and driving a structurally enhanced earning profile. Expansion into diamonds, as we have introduced our brand Vajra Diamonds by Khazanchi during the period. Our premium natural diamond jewelry line featured lightweight, contemporary design tailored to evolve customer preferences. The brand received exceptional attraction as it debuted during the Gem and Jewelry Fair 2025, which was secured an impressive order book within just a month. This validates our design leadership and position us strongly with a high value structural margin accelerative category. Our new product segment, the fine silver jewelry market in India continues to expand, driven by affordability, contemporary design, and strong youth-led demand. To capture this opportunity, we are planning to foray in coming quarter a dedicated silver jewelry line featuring modern, lightweight collection. This initiative will deepen our presence across both retail and wholesale channel and further diversify our product architecture. Now, coming to the digital transformation, we are making steady progress in strengthening our digital brand backbone. Our key initiative includes implementation of an advanced ERP system for end-to-end integration, adaptation of intelligent inventory replenishment tool for improving our stock efficiency, investment in and strengthening e-commerce, and digital engagement platform to enhance customer reach. This initiative will support scalable growth, better operating discipline, and improved working capital efficiency. As you all know, that our financial performance in Q2 and H1 FY26 was very remarkable. In Q2 FY26, the revenue was 548.92 crores, up by 46.25% year on year. EBITDA, we were able to achieve 32.62 crores, up by 112.86%. EBITDA margin increased to 5, expanding, that's improved by 186 basic points. PAT 23.54 crores, 19%. EPS 9 increased by 9.52%. EPS was 9.52 rupees, increased by 118% year on year. Q2 reflects strong operative leverage, better product mix, and consistency across all the business segment. And now we remain committed to enhance shareholder value through disciplined financial management and prudent capital allocation, strong corporate governance, and transparency. And compliance continues to guidance our business. In closing, FY26 has begun on a strong note with broader base growth, expanding market research, and meaningful progress across the strategic initiative. With the strengthened business model, growing customer base, and a clear margin accretive roadmap, we are confident of delivering sustainable and profitable growth in the year ahead. We deeply appreciate the trust and support of our shareholders, customers, and partners, and efforts of our employees. With these remarks, I welcome all for question and answers now.
Thank you, sir. So participants, the floor is now open for Q&A. Kindly raise your hand or you can drop your questions in the chat box. Sir, we have one hand raised. Yes, Mr. Attar, you can go ahead and ask your question.
Thank you for the opportunity. Hello.
Yes, sir.
Yeah, sir, I have some questions with you. So, firstly, I wanted to know, like last time you said, our new store will have a puja in December and it will be operational in the month of January, and we will get some like orders and good demand in this Pongal. So, can you please throw some light on this? Like it will be
That's what,
operational in
as
January?
previously defined, the puja
Yeah.
has been already done on 12/12 of December, that is 12/12.
Okay.
And the operation open for customers, the store will be operating from maybe third week or last week of January.
Okay. So we will get good demand in the Pongal, right?
Yes, hopefully, because the Pongal is the very strong seasonal in the South India in Tamil Nadu.
Yeah.
So we would be achieving good numbers, we believe.
Okay. And sir, can you please explain, like last time in the con call, you mentioned 150 crore you are expecting. So can you please explain, like you are expecting this 150 crore from this store in one quarter or the next quarter?
As this quarter has a very limited scope now, only 2 months are pending, and initially we are going to start up in this quarter. So hopefully, whatever best we could do, we will be trying our efforts to reach the maximum. But in the upcoming quarters, surely, as we are putting up an inventory of around 150 crores in the new store, and we are expected to achieve at least 3 times rolling at the constraint basis, we define that. So on the operational basis, when it comes into operation into full-fledged, we would be able to achieve 3 times at least of the
So 150 crore
stock
worth
what
of
we hold.
inventory we put in this store, right? Is my understanding correct?
Yes, yes, yes. Yeah.
So we are
Mr. Athar,
expecting
your
two to
sound is
three
not clear.
times revenue, right?
Yeah, in the upcoming years, you'd be
Like
able to reach
hello,
that minimum.
yeah,
Yeah.
yeah. Okay. So can you please explain, like how much we are expecting in the FY27 first quarter from this store?
That first quarter, at least we would be able to achieve somewhere around 100 plus for the first quarter from this store.
Okay. And in the whole year, we are expecting around 400, 500 crore, right?
Yes, yes, yes. Correct.
Okay. And sir, my next question on this, like, can you please explain, like, you are also a member of IBX, Indian
Hmm.
Bullion Exchange. So can you
Yes.
please explain, like, is there any limit we have to import gold, or we can import as much as we want?
No, it is actually IIBX. We can purchase it any quantity as we require. But as a qualified jewelers, we have been allotted a quantity which is at a subsidized duty. That is 1% lesser than the market.
Okay, okay. So we
Yeah.
get 1%
Yeah, we
subsidized.
get an additional benefit for that. Yes.
Okay. So all those members who are registered with IBX, they are only get this benefit apart from others.
Yes. Yes,
Okay,
sir.
okay. I
Yeah.
got it. And where do we sell these bullions and all? Like in wholesale, where do we sell these golds? Like, can you please name some clients?
That's what, as already previously I have defined, that prominent name you would be knowing at the national level, Mr. Joya Lucas, Malabar, Lalita Tangama, Lalita Jewellers, and what they say, you can call all other are our clients. And moreover, all over Tamil Nadu, well, in all district headquarters, whoever is a prominent player who is an old what they say, shops who have been doing business from 2 to 3 decades, having 3, 4 branches in all district headquarters are our clients
Okay,
for
okay.
B2B. Yeah.
So, okay. So B2B and bullion is similar, right? Quite
B2B
similar.
actually primarily we don't sell bullion to jewelers. This here majorly we sell them gold ornaments.
Designs.
What we
Okay,
manufacture.
designs.
Yes.
So
Yeah.
basically, are made like our designs, right?
Yes. Yes. Yes.
So around 30% revenue comes from bullion right now, right? 34.
Last year it was much higher as we has an opportunity of procuring an additional margin of gold bullion which was allotted by IIBX. So it was somewhere around 40 plus percent. This time it would be somewhere around 20 to 20% of the total volume at a whole.
So 20% from bullion, right?
Yes, sir.
This
Now
time.
we
And
have been improving on the ornament sector as that leg is of a higher margin and bullion is a lower
so,
margin segment. And so
okay.
our top line has improved in
Yeah.
H1 also.
Okay. Sir, like, can you please explain how much we get from B2B and B2C from this year?
Broadly defined, we have an 90-10 ratio. 90% of our revenue comes from B2B and 10% comes from a B2C segment. And broadly, margin-wise, if you defined from B2B, we are able to get somewhere around 5 to 6%, and B2C margins are around 9 to 10%.
Okay. So in this 20% B2B, just last,
Sorry
last.
to
Yeah.
interrupt you.
Yeah. Only one
Could
question.
you,
Hello.
no. Could you please be more louder?
Okay,
No, your
okay.
voice is not clear, actually. It is vibrating. That's what.
Okay. Right now, is it clear?
Yeah, clear. Yeah.
Yeah. So can you please explain out of this 90%, 20% is bullion. So 70% is B2B, right? Like, I mean, the ornament
No,
parts.
no, I am talking in a different scenario. You take it that way. So the last year top line was around 1,700. In that, 40% was bullion. Okay.
Okay.
And the remaining was of ornament sales, B2B and B2C combined. So in that B2B and B2C ornament sale, the ratio is somewhere around 90-10.
Okay.
Yeah.
Got it. And sir, any guidance for FY27?
As you know that H1 FY27 has been a good year. Half yearly of the current
Hmm.
year was very good, and the
Hmm.
next half is also expected to be achieving something like more than what we have achieved in H1 this year. And as the new shows are coming up for FY27, we would be having an additional good revenue, and top bottom line is also going to improve as we are what they say expanding into a higher margin segments. Uh, as we are increasing the sales of diamond jewelry, studded jewelry also, and adding up various designs of which are of high margins. So overall, the bottom line is going to improve. And for the top line, as we are expanding in the retail segment and the revenue of this new store will be added. So hopefully everything would be very better what we expect.
Okay. Got it. Okay. Thank you so much, sir.
Thank you.
Thank you, sir. सर अगला क्वेश्चन है अतुल रस्तोगी से. Yes, Mr. Atul, you can go ahead and ask your question.
Am I audible?
Yes, sir.
Yes.
First of all, thanks to Mr. Mehta for sparing time and doing this session. Really appreciate it. Sir, I think for one of the questions that previous speaker asked, you mentioned that you plan to open the store in third week of January, right?
Yes, sir. Yeah.
Now, Pongal is on 14th.
Yeah.
So are we like literally opening the store?
Post Pongal, you are defining that it is a season and you are opening on a later post season. Is that the question?
No. So my question is like 14th is Pongal, and are we planning to open the store on the same day or like few days back? What's the plan?
No. We are trying to. We will open the store post Pongal only because generally in the Chennai city, what you see, most of the people travel surrounding to their all surrounding villages to celebrate Pongals. So most of the people are not available in the city, and it's an Pongal is an festival that is primarily focused on celebrating their what they say reap of their farmers' reap. So they all go to their respective village and celebrate there. So once again, post Pongal only the purchases for marriages on everything starts. So we are planning to open it on post Pongal because so that we can cater all people who have come back from their festival at their villages.
Okay. So a related question, if I talk about B2C segment, typically you have big brands who are there in this industry for a long time. Now the question is, since you are opening a new store and you're supposed to compete with the names like Tanishq, Kalyan Jewelers, Nallis, etc., how do you plan to establish yourself as a niche player in that segment?
That's as we are into B2B and B2C segment from very long time. The name Khazanchi Jewellers has been derived with is joined with the company from 1991, but the founders have been working in the jewelry industry and from 1970s. So from that time, 1980s, we are into both the segments actually. Both the legs are active from that period of time. And we have been catering certain portions into B2C segments also from that period. So we have a long legacy, our presence in B2C segment from that period too. And now, since we have felt that there is a wider demand on that side, and we thought of expanding it into bigger side on B2C side, as there is a lack of facilities where we have been there into nearly 4.5 decades, and there are lots of potentials here for customer requirements. So we are coming up with the retail here with all facilities. Basic facilities are also lacking, as that parking is not there and this, that. So we are coming up with all those. With this, we are confident that we are going to have a very good response for our B2C store here.
Okay, so last question from my side. As an investor, what shall I assume as a trajectory of Khazanchi Jewellers from here on? Are we going to focus more on B2C business going forward?
No, as we have what they say, very ground-rooted experience and customer base for both the segments in B2B and B2C, as it is not new, as we are not starting B2C all of a sudden. We have a strong experience base and customer base of from past 30 to 35 years for B2C also. So in that case, we are going to strongly the legs strongly. As for the new store, I have already defined that what proportion of growth we are going to reach in the upcoming year. And for the B2B segment, as previously I have defined at the straight level, we are going to grow at a pace of at least 20 to 25% year on year.
Okay.
So we are going to expand on the both segment with our both efforts, so that our top line would be increasing at a faster pace due to B2B segment, and and additional strength to bottom line would be given by B2C.
Okay, thank you, sir. Thank you for your time, and wish you
Thank
all the
you.
best.
Thank you, sir.
थैंक यू सर। सर चैट बॉक्स में भी 2-3 क्वेश्चंस है, आई विल रीड इट आउट फॉर यू। So sir, first question है, what does company purchase and sale from group company, which is Patik Sales? Does company plan to merge it going forward?
Yeah, Patik Sales is an company which is purely dealing in raw material. Raw material, that is the bullion, gold bullion for manufacturing of which is converted into ornaments. So Pratik Sales is the company that is dealing in that, and that is the company which has been providing what they say, gold bullion to many of the players here in all over Tamil Nadu and other states also. So we are procuring gold bullion from them, and in the near future, we don't have any plans of merging that with our company.
Okay, sir. Thank you. Sir, अगला क्वेश्चन है मिस्टर हिमांशु खत्री से. He is asking, considering 90% of your revenue comes from B2B, are you planning to expand the scope from B2C? And if yes, what is the strategy?
I could not get you, because 90% of the revenue is B2B. That's okay. Then what is the scope into, you are asking into B2B or B2C? Which segment scope you are defining? I have to define.
B2C. He's asking from
B2C.
B2C. हाँ, B2C.
That's what I'm telling you. No, currently, as our company has been working in B2C segment at a pace of 10%, and going forward, after opening of this store, we are targeting at least to reach 25% of our top line as B2C sales.
Sir, Himanshu Khatri का second question है, are there any concrete plan to expand the number of stores you will going to open in near future? And does the company have any plan to expand their footprint in North or Gulf?
We do have plans after opening up our showroom, since our expansion would be on both the legs, B2B and B2C segments. So we do have plans of expansion. It would be defined with a concrete base and accuracy on a later stage. And regarding what they say, Middle East, Till now, we don't have any plans of opening up anything in Middle East. But yes, many of the export buyers are approaching us, seeking our products. And on a future date, we are planning to do business with them.
Thank you, sir. Next question, please. Participants, if you have any questions, please raise your hand or you can drop your questions in the chat box. Yes, Mr. Athar, you can go ahead and ask your question.
Thank you for the follow-up. Sir, I just wanted to know what would be the average receivable cycle for our business
No,
in
voice is not
B2B?
clear, Mr. Athar, please.
Yeah. So, what would be the average receivable cycle in our B2B segment?
Average payment receivable.
Yeah.
Yeah, our payment receivable cycles start with a spot payment also, and to the maximum, it is 21 to 28 days maximum credit.
And for bullion?
For bullion, it is upfront payment. Anybody who purchases bullion have to make payment prior, and then only the gold is delivered to him.
Okay. And sir, if you don't mind, I wanted to connect with you. Like our company also, SmartSync also connected with you last time. Our CIO and management also, like our
Okay.
managing director also met with you. So
Oh,
can you
very good.
please connect with us once again?
Sure, anytime. If you are dropping to Chennai, it would be better so that we can have an across the table, what they say, meeting.
Yeah, because our company is very much interested in your company. Right?
Sure,
Okay,
sure. Always
that's
welcome.
all. Okay, thank you. Thank you so much.
Thank you.
Thank you, sir. Sir, chat box में we have some questions. तो पहला question है from Mr. Anish Kumar. He's asking any plans to have franchise model in B2C stores?
Initially, as we are starting our B2C store now, so we are going to have increase our brand value, and then on a future date, if management finds any opportunity in handing over to franchisees, then they can plan. Initially, we don't have anything of that sort.
Thank you, sir. Next question है Pathik Sales Private Limited. Can you explain the sales and purchases from the company?
Sales and purchases from the Pathik sales, you are saying?
Yes,
That's
sir.
what. Whenever the company gets an order or whenever the company wants a raw material, they purchase it from that company.
Okay, thank you, sir.
And
So next,
yeah,
yes, sir. So sorry, sir. Please continue.
yeah, that's what I am told you. That's what.
So next question है from Mr. Yash. He's asking, considering the addition of revenue from the retail store, what's the top line and margin guidance for FY27 to FY28?
That's what I told you. By FY27, when the new stores come into full operation, we will be able to reach an additional top line of 450 crores in the retail segment. Where at a constrained basis, I defined that yes, there we could achieve a margin of 9 to 10 improvement in the bottom line. You can say around 30% of the current thing.
Okay, thank you, sir. So next question has, could you please help me to understand what are the key growth driver for retail store, like how company will able to do 550 crores to 600 crores revenue from store?
Yeah, as you know, we have a long legacy presence here. So long customer base we have already in B2C segment. And being a manufacturer, we are aware that what is the market trend going on, and we manufacture those kind of things only. And we have a vast experience with regards to manufacturing and customer demand. So we will be working on that. And you can say that we are coming up with a strong ERP management system where the refilling of stock would be based on the fast selling jewelries. we are making a strategy of marketing strategy, where we are going to make our presence known to a very larger area. All these segments, all these decisions would be helping us in reaching our targets.
Thank you, sir. So, next question we have from Ms. Divya. She's asking, as systems like ERP and intelligent replenishment scale, what measurable improvements are expected in inventory turns, ROCE, and operating leverage?
As we at B2C level, to be frank, we are going to start off with that ERP, and within a shorter period of experiencing that, we will be able to define what proportionate or what percentage of fast rolling of inventory would be helping us in that. But as per our experience, surely it is going to add up at least what they say for B2C segment, at least it is going to help at least improve by 25% of inventory turnover efficiency.
Thank you, sir. So, her second question is, what return thresholds and payback periods does management use to evaluate future showroom expansions beyond Chennai?
That's what we have a strong legacy here. So initially we have planned to start up here, and later on, whenever we find an opportunity of expanding, and we will have a clear roadmap with expansion, then we would be deciding on the requirement of funds for expansion.
Thank you, sir. Sir, next question hai, from Mr. Aryan. He's asking, as you have mentioned, around 20% of your revenue is bullion. Is it only gold or also silver? And what is the split in gold and silver, if any?
Yeah, no, the bullion is purely gold only, as we have not come up with any silver sales with that, or we don't have any silver sales in our company. So that is of.
Thank you, sir. Sir, we have next question from Ms. Divya. She's asking, diamonds are margin accretive. What operational or sourcing constraints could limit achieving the 5 to 10% top line contribution over the next 2 to 3 years?
That's what, as the demand for diamond jewelry has been increasing in the last 3 years, we can from post-COVID, there are certain data which are specifying that there is a huge development in diamond demands. So we are also coming up with a natural diamond brand as Vajra Diamonds by Khazanchi, and we are promoting that. And there was a quite good response in a very short period of time. So it is going to surely add up 5 to 10% share in our total revenue in the upcoming years, I believe.
Thank you, sir. So, next question here from Mr. Dinesh Kumar. He's asking, what is the long-term 3 to 5 year outlook of the company, especially in B2C?
That's what we are planning to expand into both the legs, as I defined previously. It would be at least at a pace of 20 to 25%, as we are going to open a new store, and at least we are going to increase our revenue to a certain extent. In the same way, in the upcoming year, to the extended revenue, if we have an opportunity of opening up new stores, the growth of B2C segment be higher than what we defined. So at a minimum level, we can define that, yes, for the B2C segment also, the growth ratio would be around 30% plus.
Thank you, sir. Next question we have from Mr. Suyash Mantri. His first question is, could you please share the total sales volume for H1 FY26? Additionally, in volume terms, what would be the expected total volume for the full year FY26 and FY27 in kilograms?
As for the volume total, if you are comparing with the past year, the sale of bullion was quite high. As you know, there was an opportunity of IIBX, which we have when we were utilizing that opportunity as an threshold. It comes with a threshold date limit, and we utilized that and added additional margin to the bottom line. In this current year, we have been focusing on primarily higher margin segments where ornament sales is high compared to bullion, as bullion is fetching a lower margin, and we are shifting up to the ornament sales and all. So overall, on the ornament sales side, if you could say that there is an improvement in the quantum base for about in H1, we were able to improve 12 to 13%. And as the prices are soaring very high, we would be growing in the quantum level at the same pace, we believe, in the next half.
Thank you, sir. Sir, his next question is, could you also provide guidance on the product mix between bullion, wholesale, and B2C for H1 FY26? Further, how does the management expect this mix to evolve for FY26 and FY27?
That's what previously, as I defined, for this whole year, we are expecting that the bullion sale would be 20 to 25% of the total sale. And if you exclude that, then out of that remaining percent, 90% would be B2B and 10% would be B2C. And for the upcoming year, as the new store is going to add up in revenue, so that will be the total share would be improving to somewhere around 20+% for B2C segment, and 20 to 25% on the current B2B business what we are doing. So that is the whole plan to achieve it.
Thank you, sir. Sir, next question is from Mr. Dinesh. He's asking, assuming new store sales beginning the next fiscal year, can we expect top line growth of at least 25% over FY26?
25%. Yes, sure.
Okay, thank you, sir. Sir, we have next question from Mr. Pal. He's asking, sir, please help me to understand revenue growth reason for FY25.
So FY25, the revenue has been growing. As you know, we have been focusing on the consumers' demand, consumers' requirement designs, and our marketing strategies. And and of course, to a certain extent, the raise of price, everything has added up. And there was a good increment in the revenue for H125. At the same pace, the demand is going up as people are shifting up for an safe haven investment in gold and silver. So, and they are fetching a very good returns also. So from everywhere, the funds are coming up to gem and jewelry sector, and things are improving. In that case, the demand is good, and we have been focusing on better higher margin segments. Uh, as you know, we have shifted a major portion from bullion to ornament sales. So our margins have improved. So that's how the things have been working in FY25.
Thank you, sir. Sir, we have another question in the chat box, that is, with gold price volatility persisting, when will a formal hedging policy be implemented and how could it structurally impact reported margins?
As we are always not taking up the risk of what they say volatility, as and when required, there are policies framed internally so that the margins could be intact, so that we do not lose anything on volatility. And it's an refilling system. What we follow, whatever we sell, we buy it back and use it for our manufacturing requirements. So any point of time, our risk, our stock, or our anything is not left idle into to end up into loss for any reasons. In that case, management has been working very keenly and watching it for that, so that everything is secured and intact.
Thank you,
So no
sir.
loss is created by volatility.
Thank you, sir. So next question is, how does management plan to balance rapid design library expansion with inventory obsolescence risk, particularly in premium and fashion-driven categories?
Could you repeat the question?
Okay. Sir, how does management plan to balance rapid design library expansion with inventory obsolescence risk, particularly in premium and fashion-driven categories.
Okay. That's what regarding design balance, what you're talking about. We are always, what they say, in connect with all the manufacturers, and we do have internal designs, and we are always having a market survey. Okay, what is in the market, which is in higher demand, and we are getting designs from all our dealers and all our manufacturers day-to-day basis, and working on the design on daily basis and improving our design library. And since the prices are soaring, we have been very widely focusing on the what they say, at a lightweight jewelry, which are preferred. And for the marriage jewelry, we have been working on on those designs which look big with the lesser quantity of gold in content. Say, if the product was to be manufactured on a previous style of manufacturing, somewhere around 100 grams, we try to bring it to 50-55 grams in the with the same outlook. So we have been working on all those segments. So our design library is also improving, and market trends, understanding the market trends, we are manufacturing all those products.
Thank you, sir. Sir, next question is what differentiates Vajra's natural diamond positioning versus established brands, and how will branding evolve if separated from Khazanchi Jewellers?
Because actually, Vajra is a brand which we have created for our exclusive diamond demand jewelry. As in South India, there is a different style of manufacturing which is called a close setting diamond jewelry. In that case, the luster of diamond, what you define, will be always at the same finish as you have bought it now, because the product what we manufacture would be closed from the backside. So the visibility of diamond will be similar always. So we are targeting those type of traditional products which can be used for a very longer period of time with the same diamond shine. And for procurement of quality diamonds, uh, we have been purchasing from site holders who have an very vast experience and always focus on quality diamonds. All those we are doing it, and we have our own channels of sourcing raw materials of diamonds and getting it done as per our requirements. So our brand is going to be a very differentiated thing compared to the market, and our customer requirement satisfaction.
Thank you, sir. So next question is from Miss Divya. She's asking how sustainable is recent EBITDA margin expansion once bullion reduction stabilizes, and what steady state margin does management target across business cycles?
That's what the, as you all know, there is a reduction in the bullion's participation in that is of lower margin segment, due to which our bottom line has been improved in H1 25. And surely it would be expected to sustain that level and improve from that. And as the new store is going to open up, and it is going to target an higher margin segment, once again, a retail segment B2C, and we are focusing on primary products of which are of higher margin, diamond jewelry and various other products which provides higher margins. So in that case, overall, the bottom line is going to improve in upcoming years.
Thank you, sir. So next question is how will rising diamond inventory cycles, that is 180 days, impact cash flows, and what safeguards exist to prevent working capital strain?
Yes, there is an what they say operating cycle with regards to B2C is quite higher compared to B2B. But even then, as they have an very good margins there, so that would be compensated based on that. On a later stage, initially, yes, our rolling cycle may be impact, but based on our marketing strategies and various other activities, what we are planning to do, on a later stage, we will be surely improving our stock inventory turnaround ratio on B2C segment also.
Thank you, sir. So we have next question from Mr. Aryan. He's asking, Are you looking to enter silver bullion market based on current outlook and silver demand in the market, or are you only planning to stay and scale up in gold and diamonds?
So you are asking about bullion silver. Initially, we don't have any plans of entering into bullion silver. Surely on giftable silvers and various silver ornaments, we are planning to go in it.
Thank you, sir. So next question is, do we have any edge compared to our peers as we operate in B2B gold business where there is no entry barrier?
It is not necessary to have an edge with everything, as the management has a very vast experience of everything, and designing and product hold and everything, whole setup plays a very vital role. And we have a very vast experience of managing that as a whole. And gradually we have been improving from so long period of time. So we do not find any much difference. Wherever there is any edge or something of that sort, the management resolve things on their own, and they have an what they say, based on their experience. There has been never a stoppage of that. So we have been improving it. So we don't find anything of that sort.
Thank you, sir. So we have one more question from Mr. Dinesh. He's asking, what do you think about the lab grown diamond? Is management is planning to include that in their inventory?
No, initially we have a thought process that yes, there would be a great demand for lab grown, but as the market survey states, the demand of lab grown here in South India is of very nominal, and the prices are not sustained with buyback values and everything. So people are not preferring lab grown diamonds. So we have been entering into the natural diamonds where it is a long legacy of purchasing natural diamonds, and which adds to the status somewhat for the solitaire sizes, as the difference between the price of natural diamonds of solitaires and lab grown is very vast. A nominal demand for solitaires of lab grown are there, but we are primarily focused on natural diamond only.
Thank you, sir. So next question is revenue growth and profit growth for FY27, FY28, and FY29.
So that we are going to add up an additional revenue for B2C, and profit growth is going to obviously improve on an overall segment, as we are focusing adding an additional.
Hello, sir.
Yes.
So sorry, sir. My internet connection
Okay.
has been unstable. So, sir, I think we have covered most of the questions. So, if there are no more further questions, can we conclude the meeting? Hello, sir.
Yes, yes.
Yeah. So, thank you, sir. Thank you, everyone, for your time and participation. If there are any further questions, you can reach out to us at corporateaccess@kirinadvisors.com. Thank you, sir.
Thank you. Thank you, everyone.
Thank you, sir.